I know you had something you wanted to start off with
Yes,
today.
there was a great question that was actually asked last week that I wanted to answer since it wasn't able to be gotten to, but it was from Ernest DeBella, and he had said started off with rock and roll hoochie coo. So I know we love that love that one. It says, what does gap down mean, as in Microsoft gapped down? And what does it mean when they say 4,000 units of silver contracts were stopped by Bank of XYZ yesterday? And I wanted to just go into both those questions because I think they're important for people to know.
I
Um,
agree. Do you want to start?
yeah, absolutely.
Okay, go ahead.
So for gapping down in trading, a gap down occurs when a stock or asset opens for trading at a significantly lower price than its previous day's closing price. So let's say Microsoft closes at $400 on Tuesday at 4 p.m. And so after the market closes, typically retail traders, they don't have access to trading. So if they released a terrible revenue report or some kind of event happens overnight, when that market officially opens on Wednesday morning at 9:30, let's say the stock price opens at $370. It's not that it traded at 399, then 390, then 380. It's literally like it just teleported or gapped down to 370. So they're basically sudden, instantaneous repricings of an asset. And as I said, for retail investors, they can be potentially dangerous because generally retail traders are locked out of after hours trading. So if a retail investor had a stop loss set at 390 to protect their capital, the gap down just blows right past it. So that order doesn't execute until 370 and it locks in just a much heavier loss than they maybe anticipated. And it shows that in volatile markets, digital liquidity can really evaporate instantly overnight. Um, so that's I don't for a gap down. I don't know if you have any thoughts on.
Well, I think you did a great job, Kenneth. And I would also say and add to
I think
it
we have a
that at
little bit of
some point,
audio
all gaps
around.
get filled. So, to your credit, that you pointed out, it didn't go from 400 to 399 to 398, et cetera, et cetera. So you just don't be fooled when it goes to fill that gap. If it is a gap down, yeah, the price can go up to fill that gap before it then makes new lows, and vice versa. If it gapped up, it can drop. The price can drop down and then move back up. So yeah, I
Yeah.
think you explained that quite well.
Perfect. So for example, 4,000 silver contracts were stopped by Bank XYZ. Just regarding the commodities futures market, like the COMEX or the LBMA, it's a really critical radar metric for identifying when institutional money is, backing hard assets. Um, I think that we can safely say that 99.99% of the stock market is just paper trading. So for contracts, investors and banks are basically betting on the future price of silver. And at the end of the week or the month, they just settle the difference in fiat. They never actually touch the metal. But when an institution stops a contract or it's called stopping a delivery notice, it means that they're not wanting to settle in cash and they're initiating the nature of their contract to demand a warehouse receipt. Um, so if Bank XYZ stopped 4,000 silver contracts yesterday, it means that they were standing for delivery and they wired the full fiat cash amount to their clearinghouse and said, okay, we want the transferring of the warehouse receipts for that silver into our possession. So the thing is, like, one standard COMEX silver contract is 5,000 physical ounces. So stopping 4,000 contracts would mean that Bank XYZ just took delivery of a receipt with the value of 20 million ounces of silver. From there, Bank XYZ can try to take possession of the silver, but as of February of 2026, the COMEX and the LBMA have put in new restrictions where they're actually allowed to refuse physical delivery if you're not a direct user of silver. So that is something that we may want to be on the lookout for when these rules change. Or they can use the value of that warehouse receipt to settle other institutional futures contracts behind the scenes. So in essence, they're performing an opaque asset swap. They're trading more paper silver than there ever was or ever will be of physical silver, even though the contract is supposedly backed by silver. And this really only works because most traders never stand for delivery, right? They just roll their positions or settle in fiat cash before that contract expires. But that's what stopping the contract means in a way that I guess kind of shows how the entire system kind of relies on everybody buying into, hey, don't ever take physical possession, right?
Yeah, isn't that the fractional reserve system in general?
Right.
I mean, okay, so you have all of these numbers that show up on your bank account, but what happens if people actually go to the bank to take out the money? It's not there,
Right.
right? So, yeah, it's a fractional reserve system, and it was designed specifically back in the 70s to keep people away, to create an artificial market. This is really important to understand because this is the part that's falling apart right now, to your point, where they stopped out these contracts because they cannot make delivery of all those contracts.
Right.
So this is really a full circle moment that we've been talking about as well, that will show ultimately that the emperor has no clothes.
Yeah, exactly. It's,
Right.
as you said, it's a Ponzi scheme from the way fiat works to the way the markets are set up under that fiat system. It just demands that there's confidence in the con game.
And there always has to be new money coming in. So where you were referring to the standard way, the standard contract of silver being at 5,000 ounces, they've broken, and the COMEX exchange has broken everything down into 1 ounce parcels as well for gold, because they need to, now that the big money's made, they need to democratize the losses, right? So they definitely silo the gains to those that are chosen to win, but then they democratize the losses to the public. It's really pretty interesting.
Right. Yeah, exactly.
But not
So,
okay.
yeah. And you're right. It's important for people to understand this because this is what is going behind the price movement, that spot contract price. It gets determined in part by these futures trades and these contracts that they're trading. And I think to your point too, when we talked about it the last 2 weeks, understanding the spot contract price and why it goes up and down is fundamental to knowing this is not the true value of these metals. This is just a trading value. The fundamental value is much, much different and much, much higher because of where we're at in the currency's life cycle. It's starting to play out. Like you said, it's coming full circle.
That's the part that's really exciting to me. I can't tell you how long it's going to take until we come to the other side of this, but I love the fact that actually valuations now matter again, and having the real thing now matters again. So it's really important for people to understand your generation, other generations after mine were really taught to accumulate experiences. And experiences are great. You want to have those experiences, but you need real hard assets as well. Because when you get into trouble and you need savings, those experiences don't give you the savings. The real hard assets, the sound money, actually gives you the savings. And I can speak from personal experience. When I was a newly divorced mom and I had to take care of my babies, yeah, I was very happy that I had some real physical assets to help us get through that block of time. It's
Yeah.
important.
Yeah, absolutely. So, yeah, with that being said, I mean, we can bring up the other questions that were being asked, if that's okay with you.
Yeah, please, let's rock and roll.
All right. So we have Turtles Today saying, "Hi, question. Despite having gold revaluation accounts, what happens to gold and silver if the government uses land or crypto for the revaluation, for example?"
Well, actually, that's a good question. And of course, anything can happen because I can't guarantee it. But many other things, including rye, including land, including cows, including stones, including the list is quite long where governments have made the attempt to revalue their currency against those other assets. Only gold actually has all of the qualifications to be a sound money. The rest of them do not. And cryptos have not even been tested, though they are in the mix and the test right now. So, the reality is what happens if they decide to try and use something else for a revaluation, like they have many times in the past, it does not work. And 100% of the time, gold is brought back into the system to regain that public confidence. They can't do it with crypto. And land, you can't, it's not divisible. You have to look at the functions of money. What are they supposed to perform? A tool of measure. You can't, how are you going to do that with a grain of land? Right? You could do that with cryptocurrencies because they are designed to mimic fiat money, just like fiat money, bills, dollar bills, etc., wherever you are in the world, was designed to mimic the qualities of sound money. So, a tool of measure, land would not really qualify for that. A tool of barter, how do you barter really with either one of those things? Barter, the case for barter has not yet been met in the crypto world. They're working on it, but it's not there yet. So that's a tool of measure, a tool of barter, a short-term store of value for fair payment of labor. I don't know how you would do it with actually one or the other, because again, the volatility and the lack of divisibility in the land, and a long-term store of value. Well, that's because they're destroying the currency. But again, cryptocurrencies have not yet been tested. So they're going to be tested now. They may be in the middle of this test anyway, but the jury's absolutely out on that. And land does not work for a revaluation account. It just doesn't, because it doesn't meet all the criteria to be a sound money or a good money or even a fiat money. Did you want to add to that?
Well, yeah, I think, and I'd love to kind of get your take on it as well. When we look at land and we look at crypto, the problem also is that when we try to determine that value for them, whatever the current value may be, it still goes back to being denominated in fiat. So how do you take something that's got its value derived from the debt to revalue it to pay off debt, right? It's kind of like it's a square peg in a round hole, I guess. Right. Whereas the whole purpose of the sound money strategy and what you've dedicated a majority of your life to researching is, why was it first gold and then the fiat came from the gold? they have to go back to the genesis point in
Mhm.
order to pay off that debt, because it's the only proven asset to actually have, retain, or store value for that kind of purpose, for like a financial purpose. And then we've got Claire Winson official says, I'm really new to the channel. Can you explain buying gold and silver when you have debt, specifically mortgage? Should I pay down the house first? How would I pay for anything with gold?
Well, you just did it with a car, but let's talk about the mortgages specifically.
Yeah.
Because the goal of the government and the strategy of the government is to repay that debt within the US dollars that have less and less and less, and ultimately no value at all. And so we basically take a page out of the government's playbook, and we do know and can calculate out what the true fundamental value of an ounce of gold is right now for its most important function, which is to maintain your purchasing power. And we use that calculation to determine how many ounces of gold would actually pay off that fixed rate mortgage. So the fixed rate, that's part of the strategy. And I'll let Kenneth speak even more deeply into it to help you understand it. Variable rate debt, bad. Fixed rate debt, not so bad. You're repaying it with dollars in this country that have no value.
Yeah, absolutely. I think that's a great point again to the layers of our strategy. I say it all the time. It really has taken into account every possible scenario. So everybody has different things that are going on in their own personal and financial life, but the strategy is designed to look at the big picture and say, okay, where is your vulnerability and how do we address it? So if you have a mortgage, to your exact point, when they do that first overnight revaluation of gold, the goal would be we take the gold to pay off the debt that you have, like a fixed rate debt mortgage, with dollars that are rapidly losing their purchasing power. I mean, at that point, we would be in a hyperinflationary environment. So, yes, you would want to just get rid of any of that fixed rate debt, specifically because you don't want to be caught in any kind of banking restructuring.
Right.
Right. When banks are going through a major financial change, like a currency reset or a liquidity crisis, they restructure their debt that they have on their books. And Lynette, when they restructure debt, is it going to be in their interest or in ours?
Well, who reads those contracts? I'm pretty
Right.
sure they're not doing it just to be nice. So, that's why you really want to be in a position to boom, pay that debt off just like that when they do those overnight resets. Then, I mean, I can't guarantee how long we're going to have, but globally on average, we should have about 9 months to execute that whole part of the strategy. So, this isn't a wham bam, thank you, ma'am, just a transaction. Good luck to you. You need to know. Our goal is to meet you where you are and help you get to where you want to be. And that's an ongoing thing. That's like a permanently ongoing experience and part of the community at Zang International.
Yeah, absolutely. And so that's really what the kind of baseline is for how do you get debt free using our strategy.
Mhm.
I always say if you have the means to service your fixed rate debt, then you can just continue to service it. If you want to pay it off, you can, right? That's everybody's prerogative. But yeah, to your point, I wouldn't say it's the worst thing in the world if you have fixed rate debt, because you can pay it off later with dollars that have lost all purchasing power. So you're relinquishing that loan in one fell swoop, and you're able to, if you're thinking about, do I pay off debt or do I invest in the strategy? If gold is severely undervalued right now, you can take more of those fiat dollars that are melting away, losing their purchasing power, to get more hard physical gold in your possession. And then when that revaluation happens, you just take a fraction of that little vault you just built to relinquish that debt, and you're left with unencumbered ounces of gold to then execute other parts of the strategy. So,
So let's get a little more specific on
yeah,
how would I pay for anything with gold.
yeah,
You're going to have some choices, and we'll know all of the choices when we get there. One of the choices would be to reconvert it back into whatever the local currency happens to be. So if it's dollars, if it's CBDCs, if it's whatever it happens to be, you would liquidate it through us. We would convert it into that local currency. Some entities, though understanding gold, would rather take gold like you just bought a car or truck with using a down payment on gold. So
right.
did you use that direct, or did you have to convert the gold into dollars in order to make that down payment?
No, I just handed him the gold. I said, "Here you go. Here's my salesman. Here's the gold." He brought it to his manager, and they actually gave me a receipt the next day, and the receipt said cash. So
So there you go. So to answer the last part, if it's demanded, then it will be converted into the local currency. If it's not demanded, but they'd rather have the gold, you'll pay for it direct.
yeah, yeah, exactly. So yeah, that's the other thing. The strategy, it works in either way, either scenario, right? If you've got to convert it into fiat, there will always be users of gold and silver out there in the world, and so you can convert it. Somebody will buy it from you, and you take whatever that means of liquidity is, whether it's digital or dollars that have lost all their purchasing power, or you can just use the actual asset itself. So you're covered on either way, and that has been our hour, Lynette. It's flown by when you're having fun.
I know it. Thank you guys so much for being here. I really, really appreciate it. You can see our commitment is to you. And I absolutely know that together we can change the world. So let's do it. And until next we meet, wherever you are in the world, please be safe out there. Bye bye.